Oh yeah, you can hear me. Let's make sure you can see. I can find it. Bam! There I am. Wearing my jacket today because it's an interesting day. We're talking about Equinix. Most of you haven't heard this company, but we've been talking about it. But I gotta read this disclaimer out for you out because I gotta cover my butt. This show is edutainment, meaning that I'm combining a little bit of entertainment with education. And it's not financial advice. I don't know if financial education. You guys have your own financial advice. That's out of the way. 10 seconds. Let's get started. Boom. See you in a bit. Hi, social media world. My name's Alfred Gordon-Lew. This is 8 at 8, and 8 minutes starts right now. Today, we are talking about this company. That company. I come with my own sound effects. Equinix. I don't know if most of you have heard about this company or not. Let's take a quick look here. This is Equinix. They power the world's digital leaders, everything from Google Cloud, which I use, Azure when I used to work at Microsoft, AWS, I think I do that for my books, Zoom, I definitely do that, and Oracle when I used to work in the city or communication centers. Oracle used to handle some of our data. So I know that most of our information, our data, was held by one of these companies, which then had these wonderful data centers, right? Especially in the contact center world or anything in the business world, you need to house your data somewhere. And this is what it looks like. It looks like a giant server room with a whole bunch of hard drives and networking. But essentially, this is what it is. Even Netflix and Cisco, look at that, all connected. So if you've ever watched Netflix, you wonder where those movies are stored, it's probably in Equinix's one of their data centers all over the world. So now you know about it. So let's just dive straight into it. And it's really interesting because let's start off today with this. You'll notice that we're not looking at Equinix right now. We're looking at the Spider or SPY. And I want to show you something. We keep on flip-flopping, which I love during the show because, boom, you can see here, there are the price of the index is lower than average. There are more sellers than buyers. And boom, right here, people are starting to get fearful. And we're always on that edge. And these three arrows or these three indicators are not going to solidify until the end of the month, February. So we got about 12, 14 days or 12 days or in that range. All right. So love to look at that, but let's dive into Equinix. And the ticker symbol for that is EQIX. And if you don't know, you can just scroll through here and look for it, and boom, there you go. Let's put that logo back on there. We're looking at this. We're looking at the technicals. I lost that technical analysis for Equinix. Right now, we are on a monthly chart. Check that, MOM. All these candles are a month. So let's zoom in and let's take a look here as well. I got to get this screen out of my face, and let's take a look at what we got here. So right now, also just like the spider, you'll see that boom, there's one arrow here, there's one arrow here, and here. This is all in the month of, January 22nd-ish. That's where kind of these triggered. So if you have a positional, you're holding this company, you might want to think about getting out. Look at this. If you did this back in January, you could avoid this massive drop, and it's still dropping. And this is essentially what I want everybody to avoid. They never say you can never time the markets, but there are indicators just like this that you should probably get out, right? When you see these three arrows, positional traders, it's time to get out. All right. But let's move on to swing trading. All right. So is there some kind of momentum? Is there something going on here? Let's get rid of these circles here and let's zoom in. So moving in, and this again, we're looking at a day chart. These are for wonderful day swing traders that are going to take advantage of a little bit of momentum. And what do we want to look here? We're not looking at our wonderful indicators here. We're going to go to another Bollinger Band study. as well. And look, it is all below kind of the average, making it that there's definitely buying opportunities. This is where you also have to do some fundamental research, not just technical analysis, to actually see if it's getting down below to a buy price. But there's definitely on sale compared to what it's normally at. So what we're looking for is this. So let's take a look at if we can indicate some wonderful opportunities, right? Here, there would have been a nice opportunity to buy if it was below your buy price as well. What I want to show you is this volatility. Oh man, all my circles are really close together. Let's see if I can zoom in here. Yeah. So here, there's a little buy opportunity. As you can see, the volatility is kind of peaking. It's coming down right now. But what is really small, which doesn't get bigger, I apologize, is this cool symbol. I don't know if you can't, it's so small, but it's a telephone. It means that an earning call is happening. And what I love about this show right now is it's magically lined up to be today. So this is the dance center. Check out this earnings call. It's amazing that I'm going to highlight it here. As you can see, February 16th. If you can zoom in there, I'm going to zoom in for you a little bit. Highlight this so you can see it here. February 16th, highlighted blue. Moving my mouse over there. At the end of day, 4 p.m. I don't know if I can highlight there. Eastern Standard Time is when that is going to report. And that's going to really swing it. So what are they expecting? I'm going to move my body so you can see it here. The Wall Street is expecting 1.4. It's a lot lower than they've done in the past. Look at that. It keeps on going down from 1.85 to 1.15 to 1.57. Now they're expecting lower. So what they report at the end of today will kind of give you a heads up if the stock is going to go up or down. And this is going to be more for our after hours traders. But if you're an intraday trader, what does that mean? You could take advantage of some of this today. So let's go back to our charts. Let's see how volatile it's been for the last two minutes. We got 2 minutes to take a look at this. So we're moving now to an intraday chart as well. And look at this movement here. Again, I'm going to take a little bit longer time frame. I got to fix this for us. Move into a 5-day. I'm going to draw a quick Fibonacci here. This is the low. This is the high. We might need a Fibonacci extension here because we're going to take that high. And then if we could take an extension, let's see if we can do that. We're going to take this. We're going to take this, that. We're going to extend it out further to here as well. Let's see what we get. All right, and now we're going to zoom in. Oh man, we're running out of time. 1 minute. I can do this. So we got our wonderful lines that we've drawn in for support and resistance. What I'm seeing here, I got to make this a little bit smaller so we can see that, is I want to show this here for you. You can see that this line right here, it says 674. This one says 662. And it's in this wonderful range. Look at these bands right here. But you can see that minute to minute, the price is jumping. We're not sure where it's going, but overall downtrend that you can see as well. So you can tell that Wall Street is expecting this to kind of go down. If we take these little resistance bands, where could it potentially go for the day? It looks like it's going to be in this range, 6640 to 669 is the high. So for all my intraday traders, this big opportunity won't happen until the end of the day, but you're going to definitely notice a little bit of volatility come out of this. So there's going to be a great opportunity at the end of the day. You're going to see these big gap ups or give back gap downs, depending on what we get. So with that said, everybody, I got to roll the intro. That was so quick. Thanks for joining in. Again, Equinix. I don't know if it's overpriced or not, but the technicals, there's definitely a dip today. At the end of the day, we can actually see if they actually perform better than expected for earnings per share, EPS. That's what they're looking at. All right, everybody. And again, if you're watching on Netflix, you got books on Amazon. If you work at any kind of big data house, right, you probably have your data stored. Don't think about it because you think it's up in the cloud, but this is actually the physical cloud right here. Clouds on Earth, people. Boom. With that said, it's awesome that it lined up today on an earnings call. They're going to report today after hours, so maybe even tomorrow morning take a look at it. Or if you want to just take a look at these charts and make your adjustments. I have a special guest that's coming in here. Boom! It's 8 o'clock in our world. We're about to get ready for school. So
8:09 right now.
this one's got a field trip.
Woo!
Yeah! Anyways, everybody, if you got your kids with you, I get to do this show just before. We're going to get these kids off to school.
Adios.
Oh, adios, amigos. We're out of here. It's fun. Love it. Again, look at those couple things. Oh, I forgot to show you my financial calendar. I want to let you know this. Today as well, I forgot to show this because we ran out of time. But Mortgage Bankers Association reports at 12. So those of you who are looking at mortgages or housing, I think that could definitely be affected when they report at 12 o'clock. 9 o'clock Pacific Standard Time, 12 o'clock Eastern Standard Time. You're going to watch some volatility happen around then. Peace.